I'll move to the next chapter now. We will do marginal costing questions now. We'll do marginal costing extra questions. Chapter 14. We will do marginal costing questions. Chapter 14. The extra questions of marginal costing. Page 34. Question 1. RPP manufacturers is approached by an international customer for one time special order similar to one offered to its domestic customer. Per unit data is given below. Material cost, labor cost, variable manufacturing support, fixed manufacturing support, total cost, markup, target selling price. It's provided that RPP manufacturers has excess capacity. What is the full cost of the product per unit? What is the contribution margin? Which costs are relevant for taking decision? What is the minimum acceptable selling price? Should RPP consider price of 2100 per unit? Why or why not? Go through the question. Now, this is kind of a very simple question. Not much to calculate also. Okay, maybe another minute. Okay. What is the full cost? You can keep writing. I don't know why this question even came because it was a very simple question. First, it is additional. Full cost is equal to full cost is equal to it's there in that table itself. Full cost is equal to rupees 2604. 2604. Full cost is 2604. Contribution is equal to sales minus variable cost. Sales minus variable cost 3906. Not sales, basically selling price. Selling price because we are doing per unit calculation. 3906 minus variable cost is material, labor, and manufacturing support. Material, labor, and manufacturing support. Three items put together. Material, labor, and manufacturing support. These three items minus 693, 315, and 504. 2394. Contribution is 2394 per unit. Contribution is 2394 per unit. Then they are saying what cost are relevant for taking decision. See, the general rule of decision making is all variable costs are relevant, all fixed costs are irrelevant. Why fixed cost is irrelevant is even if you accept the special order, you will not incur any extra fixed cost. You will not incur any extra fixed cost. So the rule is all variable costs are relevant, all fixed costs are irrelevant. No extra fixed cost will be incurred. So Point number C, relevant cost is equal to variable cost equal to 693 plus 315 plus 504. Fixed can become relevant if you are going to incur anything extra. Sometimes if you accept special order, you will incur some extra cost. That time you can consider 1512 per unit. Relevant cost is 1512 per unit. 1512 per unit. And my cost is 1512 because only variable cost is relevant. Minimum acceptable selling price is also 1512. I need minimum this much. Anything oh this is profit for me. You should not say cost is 2604. Cost is not 2604. Cost is only 1512. You earn 1512, making zero profit, zero loss. Anything above 1512 is profit because fixed cost will not be incurred for the special order. Special order, you will not incur any fixed cost. For this one time order, should I consider a price of 2100? Yes, you can go ahead and consider a price of 2100 because it's above 1512. Anything above variable cost can be considered. Anything above variable cost can be considered. So should I consider 2100? Yes, we can consider a price of 2100 because if you consider a price of 2100, you'll approximately earn some 588. Approximately earn 588 if you go ahead with the price of 2100. If you go ahead with the price of 2100, you will earn 588 per unit. Any doubts on this? Very simple calculation. So full cost is 2604, contribution 2394, relevant cost 1512, minimum price 1512. Should I accept 2100? Yes, because it is higher than the minimum acceptable selling price. Why minimum is only 1512? Because I don't incur fixed cost. Let's come to question 2. Lab corner of a new life hospital. Okay, you go through the question. I'll discuss once you have gone through the question. Okay, the lab corner of a New Life Hospital Trust operates two types of specialist MRI scanning machine, MR10 and MR59. Following is the details for the next period. MR10, running hours, variable running cost, fixed cost. A brain scan is normally carried out on machine type MR10. This task uses special technology costing 100 each and takes 4 hours of time. Because of the nature of the process, 10% becomes blurred and therefore useless result. So whatever you are doing, 10% is wastage. Calculate the cost of a satisfactory brain scan on machine type MR10. And then they are saying you can also do MR59. Should you shift this MR59? Should you shift MR59? Total cost means you'll have to consider variable as well as fixed cost. Total cost of a satisfactory scan on MR10 means you'll have to consider variable cost as well as fixed cost, because both the cost will form part of the total cost. Fixed cost somewhere they are mentioning will remain unchanged, so that is a different thing. As of now, for calculating the total cost, I'll have to consider both. So let's start. Computation of computation of computation of total cost for satisfactory scan in MR satisfactory scan in MR10. Total cost of a satisfactory scan in MR10. Ridiculous calculation amount. Ridiculous calculation amount. Calculation amount. So from one scan, I have to incur one technology cost and machine related cost. Machine has fixed cost as well as variable cost. Both are there. First is technology cost. It's slightly different from the normal set of questions you would have done. Technology cost 100 rupees. Technology cost is 100 rupees. Technology cost 100 rupees. Machine running cost. Machine running cost and machine fixed cost. You have two types of cost. One is the running cost as well as a fixed cost. Running cost is 68,750 for 1100 hours. 68,750 for 1100 hours. I need 4 hours to do a scan. I need 4 hours. So 68,750 1100 into 4 hours. You just need 4 hours to do a scan. 68,750 1100 into 4. I'll incur some 250 rupees for running the machine. Every scan, 250 rupees will have to be incurred on running of machine. Machine fixed cost. Machine fixed cost is 1000. 50,000 1100 into 4 hours. 50,000 1100 into 4 hours. 50,000 by 1100 into 4 hours. You will have to incur this as well. This is the cost incurred for one scan. But the question is saying, what is the cost incurred for a satisfactory brain scan? What a satisfactory brain scan is, some of the scan we do will fail. So if you do the scanning, 10% only will give you, sorry, 10% will give you blurred result. 10% will give you blurred and it is wastage. 10% will give you blurred result and it will become wastage. Balance 10% is of use. Balance 10%, so balance 90% is of use. So cost of one scan, cost of one scan, cost of one satisfactory scan. The difference between a scan and a satisfactory scan. Satisfactory means it should give me the result. Satisfactory means it should give me the result. Satisfactory scan is, if you do one scan, you'll get only 0.9. Basically, it's like this. Zero point 0.1 scan is equal to 531.8. Zero point 0.9 satisfactory scan. Satisfactory means acceptable. is also same 531 rupees. So one scan is 531. Point 0.9 good scan is also 531. 0.9. So cost of satisfactory scan is 531.82 divided by zero point 0.9 divided by zero point 0.9 divided by zero point 0.9. So 590 rupees I'll incur to get one correct scan in MR10, and correct scan including everything fixed variable because I'm calculating total cost. Let me know if there are doubts here. Now we are thinking of we are thinking of moving to another machine which is called MR59. Brain scan can also be done on MR59, which will take 1.8 hours, lesser time. Rejection is also lesser, but the technology cost is 137, and they are saying please consider fixed cost to remain unchanged. Remain unchanged means if you do MR10 or MR59, the fixed cost of the company will not change. This 50,000 and 243 could be a distribution of cost. There's something called as distribution of cost we do. We do that in overheads chapter. Absorb overheads or apportion overheads. So these costs have been an absorption or an apportionment of overheads. The company is not going to save any cost or incur extra cost whether you do MR10 or you do MR59, whichever machinery you follow, cost is going to remain same. So it's working note to decision on machinery, meticulous calculation, MR10 calculation, MR59. MR10 and MR59. Same table I'm doing again. Fixed cost will not come for MR10. Fixed cost will not come for MR10. We will not consider fixed cost because that is not be used for decision making. Write this. Plus calculation MR10, MR59. Fixed cost is 0 because it cannot come for decision making purpose. Fixed cost is not to be used for decision making purpose. MR59 technology cost is 137.5. Technology cost is 137.5. Technology cost is higher. Running cost is 1,60,000 hours into 160 by 2000 hours into 1.8 hours. Only 1.8 hours it will take. So that can reduce my cost. Only 1.8 hours. Cost of one scan comes down. What I need is satisfactory scan and then I compare. This you can call it as relevant cost. This is basically relevant cost. Relevant cost, because for decision making I need relevant cost. Relevant cost of one scan is 350 and 281. Satisfactory scan is 281.5 divided by 0.94. Why 0.94? Because wastage here is only 6%. Rejection in this machine is only 6%. Only 6%. I'll obviously go ahead with MR59 because the relevant cost of one scan is lower as compared to MR10. MR10 is some 389 rupees and this is only some 300 rupees. Only 300 rupees. So MR59 is obviously better than MR10. Better than MR10. Clear? Any doubts on this? For decision making purpose, we have not considered fixed cost. For working note 1, we have considered because it asks total cost. Total cost is 590. Relevant cost is only 388 and 299. So I should go ahead and shift. Should go ahead and shift to this MR59. Any doubts on this? Conclusion is we should go ahead and do scanning on the new machine. Go through question 3. Go through the problem. Okay. At budget activity of 80% of total capacity, a company was earning a PV ratio of 30%, profit of 15%. Due to the pandemic, I had to reduce the price by 10%. I was also able to achieve a production and volume of only 50% of the capacity. Budget was for 80% of the capacity. Actual is 50% of the capacity. At this level, the sales value is 27 lakh, price is 18. Due to the reduction, variable cost went up by 5%. Any change in variable cost represents a change in variable cost per unit. They've asked us to prepare a profit statement, PV ratio, break even point in units as well as in rupees. Let's start doing this. First, let's do a statement of profitability. Working note 1, statement of profitability. Statement of profitability. Try to put the data in the marginal costing format. Somewhere the answer will come. Particulars, budget, two subcolumns, actual and two subcolumns. Per unit, actual per unit and particulars, budget per unit and actual per unit and let's try to put the data in the format of marginal costing. Sales less variable cost, contribution less fixed cost, and profit. Sales less variable cost, contribution less fixed cost, and profit. We will capture whatever information is available and then try to get the missing data points. They operated at 80% capacity. PV ratio is 30%. I'll use it later because I don't know what is the sales now. Profit is 15%. Due to pandemic, I had to reduce my price by 10%. Company was able to achieve a production and sales volume which is 50%. Budget is 80, 50. Sales value is 27 lakh. At this level, sales value is 27 lakh. Sales value is 27 lakh. Selling price is 80. This indirectly mean number of units is 1 lakh 50. So actual is 1 lakh 50,000 units. Actual is 1 lakh 50,000 units. 27 lakh divided by 18. Actual is 1 lakh 50,000 units. Actual is 1 lakh 50,000 units. What I can say, 50% capacity. Actual is 50%. Actual is 50%. Budget is 80%. Budget is 80%. 50% is 1 lakh 50. 80% is question mark. 50% is 1 lakh 50. 80% is question mark. 80% number is going to be, how much is 80%?
2 lakh 40.
2 lakh 40. The budget is for 2 lakh 40,000. Actual was for 1 lakh 50,000. Budget is for 2 lakh 40,000. Budget is for 2 lakh 40,000. Now they are saying selling price has come down by 10%. So low reduced selling prices, the reduced selling prices 18. Original selling prices 18 by 90% is 20. From 20 there is a 10% reduction. From 20 there is a 10% reduction and you got 18. From 20 you reduced it by 10%. Original is 20, reduced is 18. This is 2 lakh 40,000. So 20 into 2 lakh 20 into 2 lakh 40. We are just trying to capture whatever information is possible. Question said EVR for the budget is 30%. EVR is 30%, which means contribution is 30%. Contribution is 30%. Contribution is 30%. EVR is percent, which means contribution is 30%. Contribution is 30%. And profit is 15%. Profit is 15%. Balance is balancing figure. We'll complete this part of the calculation. Balance you will get it. Contribution is percent. Profit is 15%. Contribution 30%. Profit 15%. Fixed cost and variable cost is balancing figure. Fixed and variable cost is balancing figure. Now, question says because of reduction, variable cost went up by 5%. 5% means any change in variable cost, since a change in variable cost per unit. 14 would have become 14.7. 14 has become 14.7. 14 has become 14.7 into 1 lakh 50. Contribution is this now. I think it is going to be loss making situation now. It is going to be loss making situation. This answers part 1 of the question. This is a loss making situation. Budget, we made profit. Actual, there is a loss of 2,25,000. There's a loss of 2,25,000. Loss of 2,25,000. And second segment, they want us to calculate PVR, break-even point in rupees and units. This is fairly simple calculation, just a formula driven. And this they wanted for actual, the actual sales act, not the budget, for the actual. So PVR is equal to contribution by sales to 100, 4,95,000 divided by 27 lakh, 18.33333%. 18.33333%. That is the PVR number. Contribution by sales. Break-even point in rupees is equal to fixed cost divided by PVR. 720 by 18.333. 9 lakh 27,273. 927,273 TP in rupees. 927,273 TP in units. Fixed cost by contribution per unit you can do, or BP in rupees divided by selling price. Already calculated in rupees, divide by selling price. If you calculate in units, multiply with selling price. So 7 lakh 20 divided by 3.3. 2 lakh 18,180 units. 218,180 units. 2 lakh 18,180 units. I hope this is clear. Let me know if there are doubts. Any doubts, please let me know. 29,27,273, 2,18,180. Here we have divided by selling price. In our calculation, we have divided by contribution per unit, fixed cost by CP. Both gives you the same answer. And we are reporting a loss of 225. Let me know if there are any doubts. Go through question 4. Again, an excellent problem. Go through question 4. Go through the question. You keep going through the question. Sorry, in between I got disconnected. Okay, I hope you have already gone through the question. So let's start solving this now. Company manufactures and sells three types of mobile handset. It also manufactures wireless charger for mobile. Company has worked out the following estimates for next year. Demand of the four products, selling price, material cost, labor cost. To encourage the sale of wireless charger, a discount of 10% will be given if the same is purchased along with the mobile. It's expected that the customer buying mobile will also buy the wireless charger. Company has an effective capacity of 35,000 labor hours. Labor is paid at 500 per hour. Overtime has to be paid at double the normal rate. Overtime has to be paid at double the normal rate. Other cost is 50% of labor. Fixed cost is 1 crore. No inventory. Prepare a statement of profitability. So first, in this question, I want to know how many labor hours is needed, because if you go beyond 35,000 labor hours, you will have to pay double the normal rate. You will have to pay double the normal rate. Working note 1, computation of hours required. Working note 1, computation of hours required. Hours required plus calculation and amount. Computation of hours required. Computation of hours required. Product X5. Product X5. We will sell 5,000 units. Product X5 we will sell 5,000 units. Listen, each labor is paid 500 rupees. Each labor is paid 500 rupees per hour, and the labor cost per unit is 1000. The labor cost per unit is 1000. Every labor hour is paid 500, which means 2 hours. Which means 2 hours per unit. It means 2 hours per unit. So 5,000 units into 2 hours. Into 2 hours, 10,000. 5,000 into 2 hours, 10,000. Product 6, 5,000 into 2. This is 4,000 units into 3 hours. Why 3 hours? 1,500 rupees. 1,500 rupees means 500 rupees per hour. 1,500 is 3 hours. This will take away 12,000 hours. X5 will take away 10,000. 6 will take away 12,000. 7, which is 3,000 units into 4 hours. Now 4 hours is 2,000 by 500. 2,000 by 500. Wireless charger. Wireless charger 15,000 units into 200 is the labor cost per unit. 500 rupees per hour. So zero point 0.4 hours. Zero point 0.4 hours. All put together, total labor needed 40,000 hours is needed. Overall labor is 40,000 hours is needed. In this, there is normal time of 35,000, which you pay at 100 rupees. Overtime, 5,000 hours balance, you'll have to pay double the normal time. So for first 5,000 hours, you'll pay normal time. Extra 5,000, you'll pay double the normal time. We'll prepare statement of profitability. Particulars calculation amount. Statement of profitability. Particulars calculation amount. Sales. Sales. Just give me a minute. Sales is four products: product X5, product X6, X7, and wireless charger. 5,000 units into 8,000 rupees. 4 crores. 5,000 into 8,000. 4,000 units into 9,000. 4,000 into 9,000 into 12,000. Wireless charger is slightly important. What it says is, encourage the sale of wireless charger. I give a discount of 10% if you buy the charger with the mobile. And it is said that whoever is buying mobile will also buy the charger. So this 15,000 units which you are selling, in this 15,000, 12,000 units will be sold along with the mobile. That is 5 plus 4 plus 3. 12,000 units along with the mobile. On that you have to give 10% discount. 3,000 units separate sales. 3,000 units is separate sales, which is no discount. So 12,000 units you will sell 1,350. 3,000 units will sell at 1,500. 12,000 units only 1,350 because you have to give 10% discount. 3,000 units no discount. 3,000 units no discount. 12,000 units 1,350. 3,000 units 1,500. How 12,000 is 5,000 of first product, 4,000 of second product, 3,000 of third product. Total sales. 13 crore 27 lakhs is the overall sales of the company. 13 crore 27 lakhs less variable costs. That the first cost is material cost. I have labor cost, then I have other variable cost, something is mentioned. Material cost to fill this. Every product material cost is there. Multiply and fill it. Less material cost Will the material cost. Material cost is first product 5,000 units into 2,000. Second product 4,000 into 2,500. Third product 3,000 into 3,000. Last product 15,000 into 300. 15,000 into 300. Total material cost, capital A. They've not asked product wise profit statement, they've just asked overall. So we are clubbing all of them together. Total material cost is 3 crore 35 lakhs. Total material cost 3 crore 35 lakhs. Listen, labor costs, I'm not going to do product wise. What I will do is calculated this 40,000 hours. In this, 5,000 hours is normal time. 5,000 hours is normal time. For that, you pay 500. That extra, you pay double of 500. Extra, double of 500. So, 5,000 into 500. 5,000 into 1,000. 5,500. 5,000 double. 5,000 pay 500. 5,000 pay double. 1. Other variable cost is 50% of labor. Per variable cost 50% of labor. Material I wrote product wise. Labor I clubbed it together because I had already calculated the number of laborers. Other variable cost is also together only 50%. 50%. This will give me total variable cost. Once I subtract this, I'll get contribution. Total variable cost. Total variable cost. Once you subtract, you will get contribution. I think this problem is almost over now. Contribution less fixed cost profit. Contribution less fixed cost profit. Sales minus variable cost. Fixed cost. In case there are any calculation errors or anywhere you have a doubt, let me know. Profit is 5 crore 54 lakh 50,000. Contribution is 6 crore 54 lakh 50,000. I'm not getting into detailed explanation of all concepts. Any new concept I'll explain. Else we keep doing what we did in the regular class. So any new concept you will get a detailed explanation. Else we are just following what we did in the normal regular class. Profit is 5 crore 54 lakh 50,000. Any doubts on this? If it matches, sometimes we may have some calculation errors. If that is there, we'll correct it. Let's move to question 5. Go through the problem. Okay. A company has prepared its budget for the production of 2 lakh units. Variable cost is 16, fixed cost is 4, selling price is 20% on total cost. Profit is 20% of total cost. Total cost is 16 plus 4. Break even sales, PVR, revised break even sales, revised PVR. What should be the revised sales in quantity and the amount? If a company wants an increase of 20% profit than the budgeted, and selling price is also to be reduced. Let's first put the data in the marginal costing format. That may help us in getting some data points, and then balance we will try to calculate. Particulars per unit and plus budget 2 lakh units. The marginal costing format. Particulars per unit and total. 2 lakh units per unit and total. Particulars 2 lakh units per unit and total. Sales less variable cost, contribution less fixed cost, and profit. Now, my selling price is fixed in such a manner that I make a profit of 20% on cost. So selling price is equal to cost plus 20% of cost. Selling price is cost plus 20% of cost. What 20% of cost? Because profit is 20% of cost. The cost 20 rupees. 16 plus 4. 16 plus 4 20 rupees. 16 plus 4 20 rupees. And profit is 20% of cost. All put together, my selling price is 24. Selling price is 24. 16 plus 4 20. Profit is 20% of cost. Profit is 20% of cost. So 16 plus 4 you take 20. Add 20%. Add 20%. 24. 24 into 2 lakh. 24 and 24 into 2 lakh. Variable cost is 16 rupees. 16 into 2 lakhs. Variable cost is 16 rupees. 16 into 2 lakhs. Contribution is 8 rupees. 8 into 2 lakh. Contribution is 8 rupees. 8 into 2 lakh. Fixed cost is 4 per unit, which is broadly 8 lakh. Fixed cost is 8 lakh. Profit is 8 lakh. Fixed cost is 8 lakh. Profit is 8 lakhs. Profit is 8 lakhs. Now let's start calculating. First is BP in units and rupees. BP in units is equal to BP in units is equal to fixed cost by contribution per unit. BP in units is fixed cost by contribution per unit. 8 lakh by 1 lakh units. 8 lakh divided by 8, 1 lakh units. BEP in units is fixed cost by contribution per unit. BEP in rupees, whatever you got in units, multiply that with selling price. Or you divide by PV ratio. Both are same answer into selling price. 24 lakhs. This answers part 1 of the question. BEP in units, BEP in rupees. BEP in units and BEP in rupees have been asked. PVR, contribution is sales into 100. Or contribution per unit by selling price. You can do at a per unit level, you can do at the overall level. 16 lakh, 48 lakh into 100. 3.33%. 3.33%. This answers part 1 of the question. Part 1 of the problem is done. We are making a PVR of 33.33%. Let's look at part 3. Revised break-even sales, revised PVR if you reduce the price by 10%. Only rupees they was break-even sales in rupees and PVR. Break-even sales in rupees and PVR if you reduce the price by 10%. Now, revised PVR is equal to contribution per unit by selling price into 100. Contribution per unit is selling price into 100. Contribution per unit by selling price into 100. The selling price from 24 reduces to 21.6. 24 to reduce and make it 21.6. So contribution will be 5.6. To reduce and make it 21.6, contribution will become 5.6. 5.6 is 21.6 minus 16. We'll work with more decimals to avoid rounding off issue. 25.9259%. 25.9259%. 25.9259%. 9259%. Was break even sales and PVR. Break even sales is equal to, only rupees have been asked, fixed cost by PVR. Fixed cost by PVR. 8 lakh by 25.9259%. Lakh 85,717. 30 lakhs 85,717. This answers part 3 of the question. Hope this is clear. Next says, what should be the quantity and the amount? Quantity as well as the amount if you want a 20% increase in profit and selling price is also reduced, profit should also go up, selling price should also go down. And how many units should I sell and what is the amount? So let's do the statement again. Let's do the statement again. Don't know the number of units. Revised budget. Write the heading. Particulars, revised budget per unit and total. Selling price is to be reduced, profit is to be increased. Both the things have to happen. I want selling price to come down and profit to go up. Write the format. So 24 will become 21.6. Variable cost continues to be 16. Contribution is 5.6. Contribution is 5.6. Fixed cost is 8 lakh. Fixed cost is 8 lakh. Fixed cost is 4 per unit, but fixed cost is not going to change just because you're going to sell more units. It will continue to be 4. Fixed cost will continue to be 4. So fixed cost is 8 lakhs. Profit is 8 lakh into 1.2. Extra 20%. I need an increase of 20%. This will give me the number of units now. 17 lakh 60. Approximately 3 lakh 14,286 units I have to sell. I have to sell 3,14,286 units. 314,286 units. Because 17 lakh 60,000 is the contribution. Per unit is 5.6. So it becomes 314,286. Any doubts? Someone has unmuted. Any doubts? Let me know. This is simple. 314,286. So the sales value will be 67 lakh. Wanted, what is the quantity and value? Quantity is 314,286. Value 67 lakh 88,578. If you put a total, there is a small difference. That is rounding off. We rounded off 314,85.71. We did rounding off of 314,85.71. Yep. Let me know if there are any doubts here. I hope this is clear. Let's do the last question in marginal costing. Go through question 6. Okay, this is a very simple question, but with some concept being there. Top tech, a manufacturing company, is presently evaluating two possible machines for the manufacture of superior pen drive. The following information is available: selling price, variable cost, fixed cost, capacity in units. Which machine should be chosen? Let's first do a P&L and then decide which machine is to be chosen. Then they are saying, in case the future demand, okay, there is a power issue at my home. My face may not be clearly visible to you. There is some power issue. We'll have to manage it. The class can still go on. Uh, Recommend which machine should be chosen. So let's first do a income statement for the original situation. Let's quickly close this question. And maybe I'll end it because Wi-Fi is also not there now. I'm working with mobile hotspot. So let's somehow close this question at least. Working note one, income statement. Income statement. Particulars. Machine A, machine B. Particulars machine A and machine B. Machine A and machine B. Oh, sorry, just one thing you'll have to do per unit total. I missed that. Machine A per unit, machine B per unit total. Machine A and machine B per unit and total. Sales less variable cost, contribution less fixed cost of it. Originally selling price is 400, variable cost is 240, contribution is 160. In case you have any doubts anywhere, note this. I'll do the problem in lakhs, since we'll have so many zeros to work with. 400, 240, and 160. We have capacity of 8 lakh units. We have capacity of 8 lakh units into 8 lakh. Okay, sorry, I got disconnected in between. Can you tell me till what stage was I connected? What stage was I connected in the hello? So friends,
Contribution per unit.
okay, so contribution per unit you have noted, then fine. So now sales is, after that sales is 400 into 8, 400 into 8, 8 lakh, 400 into 8, variable cost into 8, contribution into 8. How 8 lakh is? Capacity is 8 lakh. Assumption is whatever is the capacity, that is going to be the sales. Whatever is the capacity, that is going to be the sales. If the demand is lower, then there is a problem. But as of now, I am multiplying with 8 lakh. Capacity is equal. Some problem can give you both capacity and demand. Then you'll have to take lower of the capacity and demand. Fixed cost is 350 lakhs. Profit is 930 lakhs. Kind of a simple computation. Profit is 930 lakhs. This was done for 8 lakh unit. I've done this calculation for 8 lakh unit. Machine A 8 lakh unit. Machine B is for 10 lakhs. Machine B is for 10 lakhs. Same 400, 240, 160, same numbers, but this is for 10 lakh units. For 10 lakh units. Fixed cost is 200 lakh. Profit is 1400. Profit is 1400. So obviously, I'll choose machine B. I'll choose machine B because that gives me more profit. Machine B is preferable because that gives me more profit. You do the rework scenario. Do the rework scenario. I'll explain in maybe 2 minutes. Do the rework scenario. Do the rework scenario. As of now, we are preferring machine B. If there are anywhere any calculation errors, you can let me know. The revised situation where the capacity goes up to 12 lakh. Give me a minute. I somehow feel just give me 1 minute because normally they will give some difference. I don't know why variable cost is same. Okay, there is a mistake in the question. Change this number as 260. Sorry. That's what I was thinking. Change this number, it is 260. So this number is 260. Sorry about it. Still the answer remains same. Variable cost is 260, not 240. Change the question. Please change the question. It's 260. There has to be some variation. Normally it will be there. I think I made a typing mistake. 260 is the variable cost. 260 is the variable cost. And now you'll have to do it for 12 lakh units. Earlier we did it for 8 lakh. Now it is for 12 lakh units. Earlier we were choosing machine B. Now I will choose machine A. Now I will shift to machine A. With this, the marginal costing part is over, I think. The marginal costing part is over with this. There was one error in the question. Please correct that.